Hello, all, and welcome to NYU's Office of Financial Aid webinar on federal direct loans. We'd like to congratulate and extend a warm welcome to the students and families of Class of 2029. This is the beginning of an exciting journey for you, and we're thrilled to be here and welcome you to the NYU community. Our hope is that by the end of this session, you have a clear understanding of the federal direct loans you may have available to you so that you, your families, and support systems will have all the information you need to move forward. The information in this session is geared towards our New York and Shanghai campus students. Before we get started, we'd just like to introduce ourselves.
Hello, everyone. My name is Zarina Smith. I have a bachelor's in English literature from the New School. And a fun fact about me is I'm left-handed, but I place my mouse on the right-hand side of my computer.
Hi, everyone. My name is Tanya Cunningham. I have a Bachelor of Fine Arts from Marymount Manhattan College. And a fun fact, I love going to the movies all by myself.
Hello, everyone. My name is Jonathan Rivera. I have a master's in organizational leadership and business and a bachelor's in business administration. And a fun fact about me is I do quite the Sean Connery impression. Now, while our younger students are Googling who Sean Connery is and the rest of us are glancing at the agenda here, just please note U.S. citizens and eligible non-citizens who complete the FAFSA may be eligible for optional federal direct student loans through the federal government. You can find detailed information about all of these loan options at the federal site, studentaid.gov. However, today's webinar will provide basic information on the federal direct loans that may be offered on your Student Financial Aid Award. We'll talk about the different types of direct loans, what's needed to secure the loans for disbursement, interest rates and loan fees, annual and lifetime loan limits, as well as other key points of interest. We'll start with some highlights about federal direct loans.
Federal student and parent loans are funded by the federal government and not a private lender such as a bank, credit union, or state agency. These loans have terms and conditions that are set by law and include many benefits, such as fixed interest rates and flexible repayment options that are not typically offered with private loans. There are direct loans available to the student borrowers and parent borrowers, and they can help families to cover the cost of attendance that remains after other forms of financial aid are deducted from the student's bursar bills. It is important to note that the information provided today regarding federal financial aid is based on current federal law, legislative rules, and policies. It is essential for all students and parents to understand that these laws and rules are subject to change without prior notice. To be eligible for direct loans, students must meet basic eligibility requirements, such as filing their FAFSA each year, be a U.S. citizen or eligible non-citizen, meet enrollment requirements, such as maintaining half-time status, as well as meeting satisfactory academic progress. This means earning a passing grade in a minimum of 67% of all the courses in which they are enrolled each academic year, and maintain a cumulative GPA of 2.0 or higher. Now we are going to talk about the different types of federal loans that may have been offered to you.
For undergraduate students, there are three types of federal loans: the direct subsidized loan, direct unsubsidized loan, and the direct Parent Plus loan. Both the subsidized and unsubsidized loans are borrowed by the student. However, not all students will be offered a subsidized loan, as it is a need-based loan and is offered based on financial need as demonstrated by the Student Aid Index, or SAI, on the FAFSA. The subsidized loan is the most advantageous of the federal direct loans because interest does not accrue after disbursement of the loan, so long as the student is enrolled at least half-time and for a 6-month grace period after the student graduates. By contrast, because the direct unsubsidized loan, or non-need-based loans, interest does accrue after each disbursement, even while the student is enrolled in school. This means that the amount that the student borrows slowly increases while the student attends school, even before repayment begins. The Department of Education caps the amount of direct loans a student is eligible to receive each year by their grade level. This applies to both direct subsidized and unsubsidized loans. In just a little bit, we will talk about those limits.
The third type of federal direct loan is the Parent Plus loan. Parent borrowers may apply for a PLUS loan to help pay for the remaining cost of attendance not covered by other forms of financial aid. Not all students are offered the Parent Plus loan. If a combination of scholarships and grants, with or without student federal direct loans, is enough to cover the cost of attendance, a Parent Plus loan will not appear on the award package. Other than not being able to borrow an amount that exceeds the student's annual cost of attendance, there's no annual or aggregate loan limit for Parent Plus loans set by the Department of Education. Because Parent Plus loans are credit-based, the parent borrower cannot have an adverse credit history. Repayment of PLUS loans begins after the final disbursement of each loan is made. Unless the parent requests an in-school deferment, interest accrues on PLUS loans while the student is enrolled in school, but also during periods of deferment. Parents may choose to pay the accrued interest while the student is enrolled in school, or allow the interest to be capitalized, meaning that's added to the loan's principal balance at the time repayment begins. After a PLUS loan is fully dispersed, the loan servicer notifies parent borrowers when their first payment is due. Multiple steps are needed to secure direct loans. Next, we'll talk about how you can take action to accept any of the federal direct loans that you may have been offered and that you plan to use.
After your eligibility has been confirmed, action on your part will be needed for that aid to be utilized. NYU will never assume that you plan to use a loan. You, as the student and family, will need to make that decision. Loans will need to be accepted if you wish to utilize them, or you may decline some or all of the loans you have been offered. This would be done in your NYU Albert student portal. If you aren't sure whether you need to utilize a loan for your family contribution, it's okay for you not to take any action at this time. They will continue to be in an offered status during the academic year in case you need them at any point.
For all federal direct loan types, if you only want to use a portion of the loan for your family contribution, you do not need to accept the full amount. It can be reduced during the accept-decline process. We thought it would be useful to show you a screenshot of what it would look like. This is an example of the accept-decline financial aid screen in NYU Albert. NYU Albert is the student portal where you can access information and records and take action on items related to registration, financial aid, and billing. For the loan in this example, if you would plan to accept it, you would need to select yes next to accept subsidized loan and no next to decline subsidized loan. To decline the loan, you would do the opposite. Again, if you have not decided whether you will need a loan for your family contribution yet, it will be fine to leave it untouched until the time that you do know what you'd like to do. You would just need to take action at least 2 weeks before the end of the semester that the loan would apply to do so, that we would have enough time to process it. After the semester for the loan has finished, it would be too late to accept the loan at that point, and it will be canceled. One thing to point out is that most offered federal loans are split evenly between the fall and spring terms, unless specifically named. The whole annual amount will be what you see indicated. For a fall spring loan, meaning a loan that is simply called subsidized loan, like in the example you see, and not fall subsidized loan or spring subsidized loan, the amount that you accept will be divided in half between the fall and spring terms. So in this example, a $3,000 loan would be split $1,500 for the fall term and $1,500 for the spring term. If you accept a reduced amount, such as $1,000, as in this example, That too would be divided in half as 500 per term. All federal loans will be listed separately. You would need to take action for each item separately in this case, meaning that each term's loan would need to be accepted or declined.
If the student was offered a subsidized and/or unsubsidized loan and plans to accept any portion of these funds, they'll need to complete the following two items on the federal site studentaid.gov to allow for disbursement. One is loan entrance counseling. Entrance counseling ensures you understand the terms and conditions of your loan and your rights and responsibilities as a loan borrower. You'll learn what a loan is, how interest works, your options for repayment, and how to avoid delinquency and default. The other is the Master Promissory Note, or MPN for short, for the subsidized and unsubsidized loan. It's one combined MPN for both loans. The MPN is your promise to use the funding as intended toward the allowable costs of your education, as well as your promise to pay back the loan. MPNs are good for all subsidized and unsubsidized loans made during a 10-year period. If the student was offered a Parent Plus loan and a parent borrower plans to apply for any portion of these funds, the parent borrower will need to complete the following two items on studentaid.gov to allow for disbursement. One is the Master Promissory Note for the Parent Plus loan for dependent undergraduate students. The Parent Plus loan MPN is a legal document that parent borrowers sign to promise to repay their loan. It also explains the terms and conditions of their loan, their rights and obligations as a federal loan borrower, and the consequences of delinquency and default. MPNs are generally good for all Parent Plus loans made for a student during a 10-year period. A separate MPN is required if the parent borrower has more than one student attending NYU at the same time. The other item is the Parent Plus loan application. The Plus application is a one-time document required of all first-time parent borrowers wishing to take out a Plus loan for their student at NYU. A separate Plus application is required if the parent borrower has more than one student attending NYU at the same time.
Students must log into studentaid.gov with their own FSA ID to complete their required loan documents, which are the Direct Loan Entrance Counseling and the Subsidized, Unsubsidized Direct Loan Master Promissory Note. Once logged in, students will navigate to the Grants and Loans menu, then the Get a Loan submenu, where you will find the Loan Entrance Counseling and Master Promissory Note options. Conversely, parent borrowers must be logged into studentaid.gov with their own FSA ID to complete their required loan documents, which are the Direct Parent Plus Loan MPN and Plus application. Once logged in, parents will navigate to the Grants and Loans menu, then the Get a Loan submenu, where you will find the Plus Loans, Grad Plus, and Parent Plus option, which is where the Plus application for parents of dependent undergraduate students will be found, along with the Master Promissory Note options.
Parent Plus loans are credit-based, and the federal government will perform a credit check during the initial Plus application process to determine eligibility. Parent borrowers with an adverse credit history may be denied credit. For purposes of qualifying for a Direct Plus loan, the Department of Education considers a borrower to have an adverse credit history if you have one or more debts with a total combined outstanding balance greater than $2,085 that are 90 or more days delinquent as of the date of the credit report, or that have been placed in collection or charged off during the 2 years preceding the date of the credit report, or during the 5 years preceding the date of the credit report, you've been subject to a default determination, discharge of debts in bankruptcy, foreclosure or repossession, tax lien, wage garnishment, or write-off of federal student aid debt. Credit denied borrowers may still receive a Parent Plus loan by either obtaining an endorser or appealing the credit decision. Otherwise, the student may request an additional unsubsidized loan, which may provide up to an additional $4,000 or $5,000, depending on the student's grade level. Parent borrowers must be the biological or adoptive parent, or in some cases, the step-parent, of a dependent undergraduate student who's enrolled at least half-time. Grandparents, unless they have legally adopted the dependent student, and legal guardians are not eligible to receive Parent Plus loans. even if they have had primary responsibility for raising the student. Additionally, the student can apply for a private, non-federal loan. In most cases, a credit-worthy cosigner will be needed. A list of private lenders can be found on our website. Parent Plus loan borrowers who are denied and subsequently approved either by an endorser or by appeal are required to complete Plus loan credit counseling on studentaid.gov prior to the disbursement. Plus credit counseling will help parent borrowers understand the obligations associated with borrowing a Plus loan and assist them in making careful decisions about taking on student loan debt. Another important point to know is about Parent Plus Loan Master Promissory Notes. MPNs allow for multiple year borrowing under the same terms. However, when an endorser is used, the terms of the MPN used for the loan is specific only for that loan. Therefore, each credit-denied Parent Plus loan that is subsequently approved with an endorser will require its own unique MPN. For credit-denied Parent Plus loans that are subsequently approved by an appeal, the MPN remains a master promissory note and is good for future Plus loans, whether they're approved again by appeal or if they're outright credit approved. No new MPN is required. Each time a student is offered a Parent Plus loan that the parent borrower would like to take out, the student will initiate the process by accepting the loan on their NYU ABRA portal. This will allow the loan to originate or to be sent to the Department of Education for processing and for a credit check to be performed. Please note that NYU does not perform the credit check, and the Department of Education does not inform NYU of reasons that lead to credit denials, and they do not share any adverse credit history details with our office. An adverse credit history email is sent by the Department of Education to the parent borrower who is opted in to the e-correspondence on the studentaid.gov profile. We do highly recommend that you opt into the e-correspondence on the studentaid.gov profile. As previously mentioned, a credit check by the Department of Education is good for 180 days. This means that if more than one Parent Plus loan is accepted by the student via their NYU ABRA portal and originates within the 180-day time frame, a new credit check will not be performed and a prior credit check will still apply. However, if a new Parent Plus loan is accepted and originates after a 180-day credit check period has expired, the Department of Education will perform a new credit check automatically. The final step prior to a Parent Plus loan being ready for disbursement is a process we call confirmation. The parent borrower must confirm the amount of each Plus loan they wish to have dispersed to the bursar bill. An email is sent by the Office of Financial Aid with instructions on how the parent borrower will confirm each loan. Parents will be asked to answer a few personally identifying questions and to enter the desired dollar amount of the loan. Because parents must answer personally identifying questions, it's very important contact information is kept up to date with our office. For changes to parent contact information, the parent borrower must let us know in writing. An email from their personal email address is sufficient. Student requests to update their parent contact information will not be processed. So now let's take a closer look at the interest rates and loan fees. Reviewing these terms will help families determine which loan is more advantageous to them. Typically, you should borrow in the following order: subsidized loan, then unsubsidized loan, and then the Parent Plus loan. Let's see why.
New fixed interest rates are determined each year and apply to all loans that first dispersed during the period of July 1st of the 1 year through June 30th of the following year. For the period of July 2024 to June 2025, the fixed interest rate for subsidized and unsubsidized loans was 5.50%. And for the Parent Plus loans, it was fixed at 8.05%. For the upcoming period of July 25 to June 2026, the fixed interest rate for subsidized and unsubsidized loans is 6.39%. And for Parent Plus loans, it is fixed at 8.94%. So there has been a slight increase in the interest rate. Loan fees are also called origination fees, and these are fees that the federal government charges to process your loans. These fees are based on a percentage of the loan amount at the time of each disbursement. You can see here the loan fees for the period of July through June of both 2024 and 2025, and 2025 and 2026 are the same, 1.05% for subsidized and unsubsidized, and 4.228% for Parent Plus loans. To illustrate how loan fees work, we'll use an unsubsidized loan and a Parent Plus loan as examples. For the unsubsidized loan, the total of the loan for the year is $22,000. So $1,000 for fall and $1,000 for spring. After the 1.057% loan fee is deducted from each disbursement, a net amount of $990 will disperse to the student's bursar bill. For the Parent Plus loan, the total of the loan for the year is $21,000. So $10,500 for fall and $10,500 for spring. After the 4.228% loan fee is deducted from each disbursement, a net amount of $10,057 will disperse to the student's bill. While NYU will offer funds to cover any remaining costs, federal regulations requires us to adhere to annual and aggregate loan limits. So students borrowing federal direct loans, including subsidized and or unsubsidized, are subject to two kinds of loan limits. One is the annual maximum loan limit and restricts the total amount of federal direct loans they may borrow during a single academic year, fall, spring, and or summer. The other is the aggregate maximum loan limit, which restricts the total amount of federal direct loans that may be borrowed over a student's college career. The maximum annual amount a student can borrow in federal subsidized and or unsubsidized is determined by their grade level and dependency status. So a dependent first-year student or freshman are eligible for up to a total of $5,500, of which a maximum of $3,500 can be in the form of a subsidized loan. Dependent second-year students or sophomores are eligible for up to a total amount of $6,500, of which a maximum of $4,500 can be in the term of a subsidized loan. Dependent third and fourth-year students or juniors and seniors are eligible for an amount total of $7,500, of which the maximum of $5,500 can be in the form of a subsidized loan. An undergraduate student's lifetime or aggregate loan limit is $31,000, of which a maximum of $23,000 can be in the form of subsidized loans. The aggregate amount is for undergraduate students who maintain a dependent student status while in school and who never receive additional unsubsidized loan due to a parent's inability to receive a Parent Plus loan. There is a separate aggregate limit of $57,500, of which the same maximum of $23,000 can be in the form of subsidized loans. This aggregate amount is for undergraduate students who switch to or maintain an independent student status while in school, or who receive additional unsubsidized loans due to a parent's inability to receive a Parent Plus loan. While financial aid is responsible for the offering and processing of your aid, inevitably, these funds will be processed toward your bursar bill. Let's take a look at your aid from a financial aid and bursar perspective.
Thank you, Tanya. Oftentimes, families utilize federal loans to assist with any remaining costs not covered by scholarships, grants, or work study. These costs may be billed by the university, such as tuition, fees, on-campus housing, or may include indirect costs students may incur. Some examples may include books, supplies, off-campus rent, and living expenses. In reference to securing your aid, please decide on the amount of loans your family needs. In order for aid to disperse to your bill, You must follow all the steps to secure your aid by accepting the loans and completing all of the required documentation. Processing of your paperwork can take 7 to 10 days, and as such, we suggest that you try to complete this process by July 1st. By accepting and completing all documents by July 1st, you will allow both NYU and the Department of Education enough time to process your federal aid prior to your semester bill being released. Bills typically are released in mid-July for the fall term and in December for the spring term. By processing your aid, your initial bill should reflect any anticipated aid through that point. While you may decide to accept or decline your loans at a later date if they weren't originally needed, please be aware that anticipated aid and disbursement will be delayed. Families may be expected to pay out of pocket if there are remaining costs and your loans aren't processed. Keep in mind, loans that are set up as combined fall-spring, which are a majority of the loans that are offered, require no additional documentation for the spring portion of the loan to disperse. However, if you are ever offered a semester-specific loan, such as a fall subsidized loan, you have until 2 weeks prior to the fall semester ending to accept these loans. After the fall semester ends, federal regulation prohibits schools from originating new loans for that completed period of enrollment. Financial aid must first be applied to the items that you owe on your bursar bill. If all billed items aren't covered by financial aid, you can pay out of pocket or contact our office to see if additional loan funds are available. Excess funds will be sent as a refund. Health insurance charges that appear on your bill are not initially factored into your offered loan amounts. That said, if you plan to use the NYU health insurance and need a loan to cover it, please email us your request. Additionally, don't forget that you all have a deposit credit if you have accepted your offer of admission and a housing deposit credit if you will live in NYU housing. Deposits cannot be paid with financial aid. These deposits are only applicable to the fall semester bill. In the spring, your bill will be absent these credits. You can either pay the same costs out of pocket if your bill isn't covered by financial aid, or you can contact us to determine if an additional loan may be available. You can request additional loan funding by completing the federal aid request form that will be available on your NYU Albert student portal. Disbursement means that your aid has been credited towards your bill. While we initially anticipate aid on your bill, actual disbursement occurs approximately 10 days prior to the start of a given semester, per federal regulations. In order for it to disperse, you must have accepted your financial aid and completed all of your required paperwork. You will also need to be enrolled in the number of credits your financial aid is based on. That means if your financial aid is based on 12 credits, which is considered full-time enrollment, and you're only enrolled in 10 credits, your financial aid will not disperse. You would need to either enroll in at least 2 more credits or notify the Office of Financial Aid via the NYU Albert Portal Finances link that you will only be enrolling in 10 credits that term so that we can update your financial aid accordingly. If there is financial aid money left over after your bill has been paid, you will receive a refund approximately 3 to 5 business days later. Refunds to students will be issued in the form of a check unless the student has opted to receive funds via direct deposit. We strongly recommend that you sign up for direct deposit through the Office of Bursar, as it is the fastest way to receive your refund. If the refund is from a loan in the student's name, the refund will be issued to the student. If the refund is from a Parent Plus loan, the refund is issued to the parent borrower via paper check. It is very important to notify both the Office of Financial Aid and the Bursar's office of any changes to a parent borrower's contact information, because we want to make sure to avoid a refund check being mailed to an old address. Keep in mind, refunds aren't just extra money. They're meant to cover educational expenses that aren't on your bill, like books, supplies, off-campus rent, transportation, and other living costs. This is where the live like a student mindset really comes into play. Avoid splurging on things you don't need, and don't spend all of the refund at the start of the term. Instead, plan ahead and set a budget for the semester so you're making smart financial choices. If the refund comes from a Parent Plus loan and your parent receives the money, They should distribute the funds to you as needed rather than handing it all over at once. Parents can also use this as a great opportunity to help their student learn about budgeting and money management. Here are some final reminders and tips before you go.
Okay, thank you. We strongly encourage students and parents to borrow only what is needed to pay for billed and unbilled educational and living expenses. If there is an additional credit amount remaining after paying for what is needed, you have the option to return the excess funds to the lender. You can do this by completing a request form on the Finances tab of the NYU Albert portal. The Office of Financial Aid will cancel the requested amount of the loan on your behalf. Unwanted excess funds can be returned to the lender by the school up to 113 days after each disbursement is made to the bursar bill. After that, the excess funds can be returned by the borrower in the form of a one-time payment directly to the lender. Remember that loan fees are deducted from each loan disbursement before the funds are credited to your bursar bill. There is a loan fee calculator on the NYU website that will tell you the gross amount you need to borrow if you are looking for a specific net disbursement amount or vice versa, or you can call the office. Also remember that interest rates start to accrue for unsubsidized loans and Parent Plus loans at the time of disbursement on each loan that you take. Loans can only be originated up until the end of the specific term you would like to apply the funds. For this reason, any loan that you need to utilize to cover a specific term's bill must be accepted via the NYU Albert portal at least 2 weeks prior to the end of that term. This is to allow enough time for processing before that deadline. Once a term has ended, federal regulations prohibit schools from originating new loans that would have covered the period of enrollment that ended. Loans that remain in an offered status on your award package will be canceled once the term is over. Another federal financial aid regulation that prohibits schools from making the first disbursement of a loan more than 180 days after the term has ended. And this means that if your loans have successfully originated prior to the last day of a particular term, but have not yet dispersed due to missing loan documents, there will be a limited window for those missing loan documents to be completed before the loans are canceled. We encourage students and parents to complete their required loan documents in a timely manner.
Absolutely. We were always talking about the importance of those loan documents and the studentaid.gov website to make sure that we have those loan documents done. Studentaid.gov is the federal student aid portal for both student and parent borrowers. This is the site where your FAFSA will be filed each year and where student and parent borrowers complete the required loan documents, some of the ones that Tanya was mentioning. The studentaid.gov is also a very important resource for borrowers while the student is in school and once they leave school. A record of federal loan borrowing will be available to students and parents, which is important information to know as students approach graduation. The federal site has very useful tools such as situation-based loan repayment simulators, information on various federal loan repayment plans, as well as loan consolidation information and application.
In order for offered financial aid to be processed, students must log into their NYU Albert portal and accept or decline their offered aid. This will be done via the Finances tab of your NYU Albert portal. Students are encouraged to check their NYU portal often to see if there are any outstanding documents that need to be completed or any financial aid items that need attention. For example, this is where a student will see if a new Parent Plus NPN is required for any reason, or if we haven't received your direct loan entrance counseling. These are just a few examples of what financial aid items might be requested or announced via the NYU Albert portal. Also in the Finances tab, students can find links to various financial aid forms, such as requests for additional federal loan funds and federal work-study eligibility. These forms will only appear for students who are eligible to complete and submit them. Your NYU Albert portal is not just for financial aid, however. Information and links related to your academic and registrar data, as well as your Bursar account, can be accessed there. This includes any holds that have been placed on your account. Okay. At this time, most of the questions that were submitted through the Q&A box have been answered. However, if you have a question that did not get answered, or if you have any additional questions, you can reach out to us using the contact information we will be sharing shortly. In addition to the submitted questions, we would like to share with you a few of the most frequently asked questions we encounter.
Question. My parent and I completed our loan documents, but my aide hasn't credited to my Bursar bill. How do I confirm if there are any steps missing? After the student or the parent borrower has completed any of their required federal loan documents on studentaid.gov, you can navigate to the My Info section of studentaid.gov and then to the My Documents section. There you'll be able to view all documents that have been completed under the FSA ID of the borrower who's logged in, including the FAFSA report, completed loan counseling, completed MPNs or master promissory notes, and completed PLUS applications. Also, at any point after you've accepted your financial aid, including your Parent Plus loan, you can log into your NYU Albert portal and look at your to-do list. If there are any outstanding items that your parent must complete for their Parent Plus loan, such as the master promissory note, PLUS application, or the confirmation, it will be shown there on the to-do list. This is true as well as for any other outstanding items the student needs to complete for their loans.
What is considered adverse credit history in terms of applying for a Parent Plus loan? A parent borrower's credit history is considered adverse if you've had any specific kinds of credit problems, such as recent accounts totaling $2,085 or more that are 90 days delinquent, charged off, or placed in collection, or a recent bankruptcy discharge, tax lien, wage garnishment, or foreclosure.
Question. My parent is not willing to take out a PLUS loan for me. What are my options? While students whose parents are not willing to apply for a Parent Plus loan are not eligible for an additional unsubsidized loan, like students whose parents apply and are denied credit. In this case, students can look at private, non-federal loan options. Students can go to the NYU website, do a search for the private loan section of the financial aid site for more information. But please, as a note, you have to know that in most cases, a credit-worthy cosigner will be required.
I'm a 25-year-old student starting my freshman year. Can my parent apply for a Parent Plus loan? No, according to federal financial aid regulations, you are considered an independent student. Only parents of dependent undergraduate students are eligible to apply for a Parent Plus loan. As an independent student, you are eligible for a slightly higher amount of unsubsidized loan than a dependent student. Another option is to look into private, non-federal loans.
Can I receive my federal loan funds early so that I can pay for my off-campus apartment deposit? The answer to that would be no. Federal regulations prevent schools from dispersing federal financial aid more than 10 days prior to the start of a given semester.
Will I be able to reduce or cancel a loan that I accept if I later find that I don't need all of it? Yes. If you decide that you don't need all of the loan funds that you accepted prior to the funds being dispersed to your Bursar bill, you can email the Office of Financial Aid and request to have a specific loan reduced or canceled in full. If you realize that you don't need all of your loan funds after the loan has dispersed to your Bursar bill, regardless of whether a refund has been issued, you will need to request a reduction or cancellation via an online form on the Finances tab on your NYU Albert portal.
And our final question for the evening, what happens to my loans and financial aid if I drop a class or withdraw completely from school? Withdrawing from all classes or dropping a class at any point after the drop add period will negatively impact your completion rate and possibly affect your eligibility for future aid. Additionally, if you drop a course or withdraw from a semester, you may be required to return some of your financial aid, including federal loans and the Pell Grant.
The Office of Financial Aid is here for you, so let us know if we can be of service. For students admitted to our New York campus, you can reach us by phone at 212-998-4444 or by email at financial.aid@nyu.edu. Our phones are open Monday through Friday from 10 a.m. to 4 p.m. Eastern Standard Time. Mondays and lunch hours are our heaviest traffic times, so calling in the morning of Tuesday through Friday would be the best bet. Students in our Shanghai campus should call the NYU Shanghai Office of Financial Support at 212-998-2838 or email them at shanghai.financial.support@nyu.edu.
We just really appreciate you all taking the time and joining us this evening. If you have any other questions, we encourage you to send our office an email, as phone wait times during this busy part of the year can be long. We want to thank you all for attending today, and on behalf of the Office of Financial Aid, welcome to NYU.